So, Bank of America just dropped this massive report on Microsoft. And honestly, it's all about one thing: AI. They're making a huge bet on the company's future, and we're going to dive right in. We'll break down exactly how they got to their big number, what it all means, and yeah, we'll get into the pretty significant risks too. So, what's the magic number? $500. That's the price objective Bank of America is putting on Microsoft stock. We're talking a potential 31% upside from here, which of course leads to the big question: how in the world did they land on a number that big? Well, it really comes down to this one simple but powerful phrase. Bank of America is basically saying Microsoft is set up to be a primary beneficiary of AI monetization. In other words, they're in the perfect spot to cash in on the AI revolution. And that, right there, is the entire foundation for their buy rating. It's all built on a very, very smart strategy. So let's talk about that strategy. The analysts are calling it Microsoft's AI double play. And it's a really clever way to think about it. It's like a two-pronged attack that's designed to capture the entire AI market, from the very foundation all the way up to the apps we use every day. Okay, so here's how that double play works. It's brilliant, really. On one side, you've got infrastructure. Think of Azure as the digital plumbing. It's the raw cloud power that every single company needs to run their AI models. And then on the other side, you have the applications. This is stuff like Copilot, the AI assistant that's getting baked into all the software you and I use every day. So you see what they're doing? Microsoft gets paid to build the foundation, and then they get paid again when people use the cool stuff built on top of it. It's a win-win for them. And make no mistake, that application layer is deep. Copilot isn't just one thing. It's a whole ecosystem. It's being woven into Microsoft 365, into GitHub for developers, Dynamics for businesses, even their security tools. But here's the really clever part. Every single time someone uses a Copilot feature, guess what happens? It uses more of that underlying Azure infrastructure. This creates this incredible self-reinforcing cycle where more app usage drives more cloud demand. It's a flywheel for growth. All right, but it's not all smooth sailing and hockey stick growth charts. The report is pretty clear that this isn't a sure thing. To actually hit that $500 target, Microsoft has to successfully navigate three huge, critical debates that everyone in the market is talking about right now. So, debate number one. This is basically the show me the money question. Look, Microsoft has been signing a ton of AI deals, building up this massive backlog of promised work. But the billion-dollar question is, can they actually deliver? Can they build out the data centers and get their hands on enough GPUs fast enough to turn all those paper contracts into cold, hard cash? And when we say massive backlog, we mean massive. We're talking about $625 billion. That number is just staggering. On one hand, it's what's getting everyone so excited. The demand is clearly there. But on the other hand, it's a source of real anxiety. How do you possibly execute on that scale? It's a huge challenge. Okay, debate number two, the elephant in the room, OpenAI. I mean, this partnership has been an absolute game changer for Microsoft, no doubt about it, but it's complicated. The report brings up some really tough questions, like what are the exact financial terms of this deal? And what happens if OpenAI struggles to make money on its own? It's this incredibly high-stakes alliance. You've got massive potential rewards, but also some pretty serious financial risks tied to it. And that brings us to the third and final debate, which zooms way out to the big picture. This is the question on everyone's mind right now. With just unbelievable amounts of money pouring into AI from every corner of the tech world, are we just in a massive speculative bubble that's about to burst? Or is this something real? Is this the expensive, messy, but absolutely necessary beginning of a technology shift that will change everything? And that question, is it a bubble or is it a revolution? It leads us right to the money. Because building this AI future, well, it comes with a price tag. And it's not just expensive, we're talking astronomical costs. I mean, just take a look at these numbers. This is Microsoft's capital expenditure. That's just a fancy way of saying the money they spend on building stuff like data centers and buying servers. It's projected to more than triple, from $44 billion this year to a jaw-dropping $143 billion by 2028. That right there is the price you have to pay to lead the AI race. So you see that spending and you have to ask, what does that do to the company's financials? Well, there's a trade-off. In the short run, all that spending is going to squeeze their free cash flow. That's the real cash they have left over. So those margins are going to dip a bit. But, and this is the really important part, the report believes Microsoft's core profitability, its operating margin, is going to stay rock solid. We're talking stable, above 46%. So yeah, they're spending a ton of money, but the core business is still an absolute fortress. Okay, now, before we wrap up, we have to do our due diligence. No investment report is complete without looking at the fine print, right? So let's talk about the risks and the reality checks that Bank of America itself includes in this report. And right up front, credit to them, they're very transparent about this. They state that investors need to know that the firm might have a conflict of interest. I mean, they do business with Microsoft as they do with many of the companies they analyze. So the takeaway here is you should always treat these reports as just one piece of the puzzle when you're making a decision. Okay, beyond that disclosure, the report lays out 3 key downside risks. Risk number 1, margin pressure. The Azure cloud business is a beast, but it costs a lot to run. All that physical hardware means its profit margins are lower than pure software. As Azure gets bigger, it could drag down the company's overall profitability. Risk number 2 is simple, competition. AI moves at lightning speed, and there's always a chance a competitor could just build something better, faster. And finally, risk number 3, the economy. Enterprise spending goes in cycles. If things slow down, those big, expensive IT projects are usually the first things to get put on hold. So it all comes back to this one central question that really defines this whole moment in tech. Microsoft is building its AI future on an absolute mountain of investment. They're betting the farm, really, on this 2-layered strategy paying off big time. And the question for all of us is this a bubble? Or is this just the necessary, unavoidable price you have to pay to build the next era of technology?